Hello, fellow traders. Tis I, the Rumpled One. It's Wednesday, March the 6th. The year's 2019. Let's talk trading, how to trade like a pro. Three-legged trading stool. I'll get right to it. There's three things you have to do, and if you're short one of them, you're probably not going to be a successful trader. Number one, which is the least important, is your trading plan, your method. Number two, money and risk management. That's important. And number three, self-management. Your emotions, your psychology, what's going on in your head, your discipline or the lack thereof. Those are the three areas that you have to be good at. Because if you can have two, but if you don't have a third, like if you don't have a good trading plan, doesn't matter about money and risk management, you're just going to keep stopping out. If you don't have good money and risk management, you could just blow your whole account. And if you don't have discipline and good psychology, and what good's having a trading plan if you don't follow it? Ditto with money management. So you got to think of those three areas. Once again, your trading plan method. Number two, your money and risk management. And number three, your self discipline, your self psychology, basically your behavior. So that's what you need to focus on. So let's move on and take a look at what's going on here. Okay, money and risk management. Okay, the euro yen still moving down on the week. Oh, look, all the gaps filled. So you see, if you had a trading plan that said you're going to trade those weekly gaps, you're going to take whatever you can get on those fills. If they fill, well, there you go. Once again, another week all filled. And the euro yen, as you can see, it's moving back towards the yearly open. And those dots, that's the previous day's midpoint. So once again, a bias. If it opens below the midpoint, I want to be short. Now, if it comes up and crosses the midpoint, then I want to go long. But I'm going to look to short unless it goes above it. And here we go. First day of the month. High and low. First day of the week, high and low. And you can see here, we've been dropping out of that level. Once again, seeing how these levels, how price reacts to these opening levels, the opening day of the month, week, and year. And if you're wondering where the year is, it's down here. So we're above the high, the opening day high. And you can see here we're below, red there, below the March open, but above the January and February open. And you can see here we're within those ranges too. Except here's the low of day one, we broke below that. And here's the high of January, high of February. So you can see here, we're kind of in between. So we'll see, do the highs support or do we break through that low? Inside bar, traders, you see here, we came inside that bar, 126.21. And you see here, we're now 11 pips above that. Once again, this area, you want to basically use it as a breakout. And if you're looking for current inside bars on the daily, weekly, and monthly. Once again, breaking out of that daily low, you see only 36 pip range, very low range. We got 1, 2, 3, 4, 5, 6, 7 pairs over 100. Looks like dollar Canadian's been putting in some nice ranges there. Might have to considering starting to trade that again. I used to like to trade euro yen, dollar Canadian. Those were the three that I would trade on a regular recurring basis. Okay, here we go. There's the daily low for the month right here. And you can see here, here's the monthly H1 lowest open. You see price dipped below and came back up. That's the holo trade. And we're using this screen so we can look at all these holos as opposed to just the one, the current daily holo. And here we go, the pivot zone, or the buy zone with the pivot. Okay, the bias was long. As you can see, we did not take out that pivot. We had 1, 2, 3, 4, 5 attempts here to get out of the buy zone. But with this range of only 36 pips, we did get a short. But if you're going with the bias, then again, since it opened below the midpoint, if you use that as your bias, you would have taken that short. And so you see it's trading. You take one bias, it would have been a profit one way. You take the other bias, it'd be a profit the other way. So you have to choose which one you use. Maybe you use both and you only take them if they confirm. That will cut down on your trades, but it might cut down on your losses. You just have to find out how it works for yourself. And you can see here, not enough separation between the rat zones, so we don't even look at it. We missed that pivot. I believe is this the monthly pivot? Yeah, monthly pivot line, 125.89. So I wonder if we'll head back to there. And we missed that pivot so far today. And you can see here, once again, this 36 pip range. 2-ball bottom, green at the line. 2-ball top, green at the line. 3-ball bottom, green at the line. Actually, that was a green at the line. That was a green at the line. 2-ball top and red at the line. Pro trade red at the line, not much. You can see we're coming back the other way. Wick zones, in and out, in and out, in and out. But on some days, there's just not much to be had. So you're just going to take those, 1 to 5 pips and just hopefully they add up. Here we had nice movement around that previous day's low. Just trading what you see, basically. And as you can see here at the tick level, we're just kind of going up and down in about a 3 or 4, about 6 pip range here. Not much to be had. Now, it's just really important. People are talking about the whip, getting whipsawed. Now, it's not just because I created this, but, once again, F9, you just have to look. You see, right here, we've got the valley of the ask, and right now, here's the peak of the bid. And this is the spread, okay? You just have to remember. See, price can only go up if the bid gets above the valley of the ask. Otherwise, the price isn't going up. And price will only go down if the ask gets below the peak of the bid. So if you're getting whipsawed, maybe you should just hit your F9 key, bring this chart up, and time your entries. Now, does it always work? Or, can it come back? Of course, it's trading. But this is just kind of a I guess it's something that I observed, and it just makes sense. How can price go up unless price gets above the valley of the ask? In other words, the lowest point at the ask when you're looking at a chart. And vice versa. How can price go down unless it gets below the peak of the bid? I mean, it just can't. So just use this for timing. I mean, and that's what I have, on my right here with the what did I call this one? The spread dots. And then I put it here. I tell you, waiting. You see, the ask is above the valley, or I'm sorry, the ask is above the peak of the bid, and the bid is below the valley of the ask. So unless bid goes above this or the ask goes below that, you don't really have buying or selling. You've just got, and right here, as you see, it dropped down and it say, now we've got selling. And you can just watch this. So now, how can price go up unless it gets past here? I mean, we're just talking the spread. I mean, how can it, I mean, it's not going up because you can't buy at this price. You have to buy at this price. So if you buy at the ask, price isn't going to go up unless it gets above this line. Okay, so now it just dropped back down. There's more selling. And so it's dynamic. You see, it doesn't just stay because we went from waiting back to selling. And once again, if you hit your F9 key, you can see it. You see right here, we came below that peak. So right now, here's the valley of the ask. And we need the bid to get below, get above this point for there to be buying. So you see right here, it's interesting. Something's lagging here. That's interesting. So I hope you can see this. So So that's it, fellow traders. Three-legged stool. The least important, your trading plan. Next is your money and risk management. And the most important is you. You having control over what you do and how you think. Your trading psychology, your self-discipline. That's it. You have to have 3 strong legs, same length. You don't want a weak leg or a short leg. Because it's not what you trade, it's how you trade it. So drain the banks like a pro.